Okay, there is a doubt in this retracement candlestick. Okay. So first of all, we need to understand this condition of the market. Okay. So there is a round number level. And
Yes.
this candlestick is a, if we take these three candlestick, try to understand.
Morning, evening star.
Evening star. That
Yes.
is also three candlestick pattern. Okay. Now, if we take only two, that is outside bar
Outside.
pattern. So if this one is the last stage of the market, this one, and market already hit this seller's entry point area. So when it hit the seller's entry point area, that means buyers are weak or stronger. Buyers are weak.
Weaker.
And there is a pressure from the seller side. And bullish candlestick, this one, and bullish candlestick volume is low here.
Yes.
Why? Because of this area. This is the strong seller's entry point area. After that, see, sellers entered in the market very strongly with high volume. Okay. Again, high volume. So when market create that type of situation, you have to think that this one already starting point, a very strong point by the seller side. That's why each and everything is now matching. What in situation matching here? That is the weakness by the buyer side from the round number level and a strong sellers with a strong volume, high volume. And next candlestick down. That means you have to think that sellers are now stronger. Okay. So when sellers are stronger, now suddenly buyers entered in the market. It's okay.
Yes.
Because
Yes.
level breakout happened. So when level breakout happened, it come as a retracement candlestick.
From here, and it has created a volume at push bar, a big volume at push bar.
Try to understand one thing. This is a support level. Am I right?
Yes.
And this is the resistance level. Okay. So this is the support and this is the resistance. Who powerful here?
Sellers.
Sellers powerful here. And after that, in this area, who powerful here? Buyers powerful here. Sellers weaker here. But now sellers powerful, buyers weaker. So when opposite situation happening here, what may happen?
Next candle will be red.
Will be red, but we must focus on this point. Is there any extreme buyers entry point area here? This one?
No.
No.
Yes.
No. Why? Why yes? Because it's only one reversal.
Okay. Yes.
One reversal. If it again and again reverse, that means bullish candlestick again and again reverse the market like this. Again and again reversing. And it's the third or fourth time market reverse here. So now this one is a strong buyer's entry point area, extreme buyer's level. But there is no that types of situation here. An opposite situation happening here. After weakness by the buyer side from this round number level, sellers strongly entered in the market with candlestick pattern, double candlestick pattern, triple candlestick pattern. Yes. After that, sellers again entered in the market. Both sellers are stronger. Now suddenly buyers entered in the market, they are weak. And if you calculate this point, there is a gap also here. And if this candlestick, see, these buyers tried best to break this resistance level, but it failed. Why? Because of this seller's pressure, because of this rejection. Sellers push the market down and it closed as a bullish candlestick, weak bullish candlestick. Just observe the single candlestick patterns. So market is strongly falling down from here after creating evening star pattern and outside bar pattern. After that, buyers entered in the market, and these buyers are very, very weak buyers. So what we learned? We learned, suppose it's a level. If strong sellers entered in the market like this, after a breakout of any level, if buyers give us this type of candlestick, very weak candlestick, so it's an inside bar pattern. in the downtrend market or in the strong situation by the seller side. So when it's inside bar pattern, now we have to observe where is our level. Our level is here, that means here. Okay. Now we can observe the volume condition. And we have to take data from the delta river. Okay. Now we are observing what's happening here. So by this situation, tell me the name of this bar.
So this is a push bar because volume is high at this area.
Okay. So it's a push bar. So it's a push bar. Volume is high exactly at this point.
Yes.
Now see the color. Which color this one?
It's a red color.
Red color. That means seller's volume high here. Seller's volume high here. So,
yes.
And this is a inside bar pattern.
Yes.
Downtrend market pattern. So this is your confirmation that sellers will enter in the market, but you must place your trade from a safe zone.
I was confused because we have learned when there is a high volume, whether it is red or green, at the push bar level, then the next candle will be green. So that is why I was confused.
No. It depends on the market situation. It's a common theory.
Yes.
It's a common theory. What you are telling, it's a common theory. Just it's a push bar. Volume is high here. Next candlestick up, it's just common theory. But in a downtrend market, how you think like that type of situation? When buyers are weak?
Yes. Now I got it.
So don't apply any common theory, this type of common theory. I am just giving you example in the chart and it's a practical class. So I'm just giving you information from the chart based on market structure and movement with this theory. When you set any common theory in a practical market, that will change. The situation will change. Okay. So when you will write, try to understand. When you will write, suppose market strongly fall down like this. Okay. This is the first reversal, again market falling down like this. Again falling down. Now market came back to this type of round number level. And we already got the data that these sellers are very, very weak exactly at that point, like this one, okay? And like this bullish candlestick. And this area, if we observe this round number level, we will get so many reversal, market fall down from that point. So now, same here. Market again and again reversed from this area like this, and goes up like this. So now market again came back to that area. After that, buyers entered in the market and this is a push bar. That means sellers almost finish. Sellers are very, very weak. Where sellers are very, very weak? Sellers are very, very weak at the buyers area. A strong buyers area. What types of area this one? A very, very strong buyers, extreme buyers entry point area. And from that area, buyers already entered in the market and it created a bullish pattern. Okay. It may outside bar pattern. It may bullish engulfing pattern. It may piercing line pattern. It may bullish harami pattern. And this candlestick volume is high at the open price or at the wicks. So now it's a push bar from after finishing the sellers almost done here. Buyers are very, very strong in this area because we already got this data that it's a round number level and market already reversed so many times from that area. And then buyers again entered in the market and it already created a bullish pattern like this in outside bar pattern, like this morning star pattern here. And this candlestick volume is high exactly at the open price or wicks. That is the perfect situation. Now we can expect next candle up. But you think totally oppositely. You are just thinking this is my support and this is the volume is high here. So this is the push bar. Why next candle didn't goes up? Why market fall down? No, you thought totally oppositely.
Yes.
Sellers already entered in the market very aggressively, very strongly. And oppositely, this is your confirmation, extra confirmation by the buyer side that after strongness by the seller side, market create here a very, very weak candlestick. Although this is a push bar or pushing in direction, so this will fail. It will fail, it will not work. And when you see the volume is high and this volume is by the seller side, now that is your another extra confirmation. Yes.
Yes.
More possibility next candle fall down.